Hey, what are your financial goals for 2025? And what are some actions that you could take? Small actions that compounded over the rest of 2025 could really move the needle for you in your family's financial future. Hi, I'm John Alford, part of Five Rings Financial, the Alford Agency, the Defusing Financial Risk Guy. That's the YouTube channel you found this video on. Wanted to talk to you about the small things that you can do. Was making changes to your finances and to your money and your money mindset part of your New Year's resolutions or New Year's goals? Well, probably so if you're watching this video, correct? So let's talk about five things. These are not hard. These are not, they're going to take some discipline, but we're not talking massive things. We're not talking, you know, moving $100,000 or $1 million, any of that. Now, hopefully, it'll get you on your path to those. And if you have that kind of money, well, maybe these steps will help you too. But let's get right into that. Number one, hey, let's talk about debt. Let's talk about those killer credit cards, right? We got to get out of credit card debt. If you're paying interest at 18, 22, 24%, you'll never win with your money. That's one of the things we teach at our Money 101 seminar and workshop, that if you are paying interest, compound interest works against you. When you're earning interest, compound interest works for you. And so, if you're paying 18%, 22%, even more on a credit card, doesn't matter what you're earning in the bank or earning in your investments, right? You're not going to come out ahead. There's lots of ways to get out of credit card debt. I'll put up a video talking about one of the most popular methods, what's called the debt snowball payment method. There's also the debt avalanche. They work very similarly. They just organize your payment plan a little differently. You could always roll your debt to a lower interest credit card, potentially if you have access to home equity using that. But the danger there is, if you pay it off too long of a time period, you're now paying interest on a longer period of time. But even just putting a little extra to those credit cards and then trying to get the best rate you can, you got to stop using them, right? You got to pay off the new charges in full every month. But that's step number one. I recommend the first of the five actions that you really should take. The second one is build up some emergency savings. That's one way we keep from hitting those credit cards when we get them paid off. It also allows you to, get through those challenges and focus on getting through the challenge, not what it's doing to you financially. Whether it's, you have a tire blowout or get damaged. We had that happen recently. You have an appliance at the house break down. You get a sick pet or a sick child, right? Or you get sick. And all those things can happen to you. So build up some emergency savings. The minimum I'd recommend is get $1,000 first, then work to have 3 to 6 times your monthly expenses. That way, something happens, you can survive for 3 to 6 months. That is an awful lot of money. So I know that may take the rest of this year and the next year. And I'll talk about a way to create some of that reserve as in step number 4. But hey, let's not jump step number 3, right? And three is a good one for it because mine is 3%. I'm talking about that retirement plan match at work. While I work with Five Rings Financial, I'm what I call blessed to do both. Some people might call it dual career. I do work, and my company offers a 401k match. That's free money, right? Now, if I have credit card debt, I need to get rid of that first. But by putting extra money in my 401k, whatever the match is, it's like getting a free pay raise. Yes, it's in a retirement account, so it's a pay raise for future John. But it'd be like you walking into work tomorrow and going, "Hey, for 2025, we'd like to offer you a raise, 3, 4, 5%," and you say no. When you don't do that 401k match or 403b or TSP, whatever it is, 457, again, maybe not contribute any more than that, especially if you're still building the emergency savings, you're still paying off other debts, but at least get that match, get that free money, and then there are other options after that. Okay, so number 4, this is where I'm going to talk about being able to build an immediate cash reserve. Make sure you have the right kinds and the right amounts of insurance, right? I am a life insurance licensed agent. I'm not property and casualty licensed. I'm health. I passed the health test, but I don't do health insurance. But review those insurances from time to time. I mean, unfortunately, a lot of people have way too little life insurance. They might have the old style death only life insurance. There's a type of life insurance. I already have a video up about it called living benefits. And living benefits life insurance pays if you get sick but don't die. That way, you wouldn't even use your emergency fund. You would use the life insurance company's money. And usually, you would have bought dollars with pennies by having living benefits. The other thing is, most of us insure our cell phones, right? And we may have more coverage on our cell phone relatively to its value than your value, right? If you only have the life insurance they offer you at work, that may only be $50,000. Well, could you retire today on $50,000? Well, if something happened to you, you're basically giving your family that much money for the rest of their lives. Term life insurance is the cheapest, best ways to get a lot of coverage. It does come with living benefits if you get it from the right companies. And then there's permanent life insurance that, depending on your tax situation and your finances, it's a very effective way to grow and protect money tax free. It's not for everybody, but for a lot of people, it works really, really well, and in some ways has more flexibility than a traditional retirement account. But do you have, high deductibles on your auto insurance that may, be adequate, or they might be too high? Conversely, they might be too low. A couple of my vehicles have only been worth $2,000 or $3,000. So having $1,000 deductible, well, if it takes more than $1,000 damage, odds are they're going to total it. I've had 2 or 3 cars totaled because they're just not worth a lot, right? And some of the things I drive are a little beat up. Conversely, we financed our most recent vehicle, got a really good deal on it, and it was time to get a new one. We have to cover, that vehicle differently because of the loan. So I'm not saying that one size fits all there, but do you have the right amount? Are you paying for coverage that might be duplicated somewhere else? You might have a credit card that has roadside assistance, or your new car came with roadside assistance, and you're paying for towing in your auto insurance. It's not going to save you a ton amount of money, but it might save you some. Beginning a new year might be a good time to review those policies. And then the last thing. So let's review real quick. Number one, get out of credit card debt. Debt snowball, debt avalanche. You can Google those terms. I'll post a video soon on that. You know, you need to have some savings. Number two, savings, emergency fund. Start small and then just slowly build it up over time, right? Number three, get that free money in your retirement plan if your company offers a match. If they don't offer a match, then put money in there or put it in other types of long-term savings for you. Four, make sure you have the right kinds and the right amounts of insurances: medical insurance, health insurance, property and casualty insurance, homeowners or renters insurance, and yes, living benefits life insurance. Hey, if so far this content has been useful to you, please hit the subscribe and like button. Share my video. I'm just growing this channel as a uh, only financial literacy information channel. So that's why you see the small number of subscribers. I just started this channel up a few weeks ago, so I'd appreciate those likes and subscribers. I apologize. I don't know what happened right then. I think I bumped something, bumped the touchpad mouse or something, and stopped the video. So here we go. We're back. Talked about the four that I've already discussed. Asked you to like and subscribe. Appreciate that. But hey, before I get started, I'm going to pin a comment as soon as this gets published saying, hey, what did you find of the five? Which ones you're applying? Or maybe if there's a tip that you're applying in 2025 that you care to share, please comment. I look forward to hearing it. And maybe, hey, if you have a success and a victory from 2024 to share with us, that'd be great too, right? Celebrate our victories, celebrate our successes. So number five is invest in yourself. Self-development, personal development, spiritual development, getting in shape, all those things, are just as important or more important than truly what we're doing financially. Obviously, we have to provide for ourselves and our families, but, invest in yourself. Make those habits, just like how money compounds when you're compounding interest. Good habits, whether it's reading a few minutes a day, whether it's listening to a podcast or a YouTube video, whether it's listening to a book on tape, whether it's meditating and your specific spiritual practices. Mine are reading the Bible and praying and fellowshipping with other like-minded individuals, and sometimes friends from other spiritual practices. They have things to teach me and show me as well. But investing in yourself, just like compounding money, compounds over time. You don't think, well, what's a few minutes just doing a breathing exercise or going for a walk, or that one choice at the buffet line or the snack, right? But over a whole year, it can make a huge difference. I know that's something I have to work on. I jumped on the scale yesterday morning. Nice round number, not the round number I wanted though. So I know I need to practice what I preach there. The other thing is invest in yourself. As I mentioned, when you celebrate a win, do an experience that's meaningful to you. It could be something small for a small goal, like a quick afternoon staycation or a weekend staycation, or it could be a big goal, right? Or it could be an experience to say, I've always wanted to visit somewhere, and plan for that and have that goal out there. This shouldn't be all drudgery. When I teach a money mindset class, I try to get away from the word budget and say that's our spending plan. That's our trip to Italy plan, our trip to Central America plan. That's the you know great weekend away with my spouse, or rent a car that I really want to try driving. Put those out there and aim for those as well. As you knock out these other steps, number 5 is invest in yourself, and sometimes that's also doing an experience to help us reset and get going on the next set of goals. Hope you found this helpful. Thank you for your time and your effort. Again, down in the comments, tell me what's been working for you. Celebrate a success from 2024 and what you're going to be applying in 2025. Hey, John Alford, Defusing Financial Danger.